Hello and welcome to the Thai Innovator Webinar series. And today we're pleased to be joined by Yago, CEO and co-founder of BitcoinOS, Adriano, CTO of Stacks Labs, and Gabe, BD manager and at Chainway Labs and Citrea. And today we're going back to the roots. We're going to be exploring the evolution of Bitcoin beyond just simple value transfer or value storage. And specifically looking at new token standards, rollups, zero-knowledge proof-based infrastructure, and seeing what can be expanded and can be built on Bitcoin. And we'll try to have a look at what it will take for Bitcoin-based applications to reach broader, bigger mainstream adoption. Before we get started, as always, the information contained in this webinar is for informational purposes only. It's not intended as investment advice. And now, without further ado, let's just kick it off. So we'll start with a quick round of our panelists. So could you please each share who you are, brief intro, and what your organizations are contributing to the evolution of Bitcoin?
Sure. My name's Edan Yago. Most people know me as Yago. I've been building in the Bitcoin space now for 15 years. So I've seen much of the evolution of the industry. Among other things, I helped found Sovereign, which became the largest and the pioneering DeFi platform and ecosystem for Bitcoin. And over the last few years, I've been working on building out the ability to bring greater functionality to Bitcoin. And this has culminated in BitcoinOS or BOSS, which has been a pioneering project in ZK for Bitcoin and utilizing that for programmability in Bitcoin. Among other things, we were the first team to demonstrate zero-knowledge proofs on Bitcoin, and then also demonstrate how they can be utilized for programmability. And so now we have a ecosystem of developers building everything from rollups to privacy to DeFi, and perhaps right now most popularly programmable tokens on Bitcoin.
Yep. And next we have Adriano. Do you want to go next?
Yeah. Thank you for having me. It's a pleasure meeting you all. My background, computer science. I studied pretty much the stuff that we're doing here today, cryptography, security, and distributed systems. I joined the Stacks ecosystem 8 months ago, roughly, so relatively young, even though that's quite a long time in blockchain ages. And I'm the CTO for the ecosystem. When I joined, the Stacks was composed by a few companies that were all working together. And now we have one company, Stacks Labs, which basically takes care of all things around protocol development, application development, integrations, and all the required actions and work roadmap items around it. What do? We are a Bitcoin L2. The goal of what we are doing here is basically unlock the Bitcoin economy. It's a tricky thing to do because Bitcoin lacks programmability and it's very conservative. But we think that we are contributing quite a lot to the ecosystem. And we have seen in the recent months an incredible growth in terms of developers. Plus, we have released a bunch of good integrations. We have just integrated with USDC. We have a one-to-one pegged asset for Bitcoin that you can, of course, use in DeFi. And we have a lot of improvements on the roadmap that maybe I'll share a bit about later.
Yeah, thanks for having me. My name is Gabe Parker. I do business development at Citrea, And at Citrea, we're building a ZK rollup that is built on top of Bitcoin, that is fully EVM compatible. We're also one of the pioneers for trust minimized BTC with a technology called BitVM, which is for our native bridge from BTC to Citrea. And I've been at Citrea so far for almost a year now. And previously, I was at Galaxy doing research for 3 years, mostly Bitcoin research, a lot of research on Bitcoin L2s and the history of scaling. So this topic here is my favorite. So really excited to get into the project.
Awesome. So let's get started on defining what a Bitcoin L2 is, right? So when we say Bitcoin layer 2, what does it mean? And what type of indicators do you use to try and distinguish between, long-term meaningful infrastructure progress from more like short-term experimentation?
I'll take a stab at this first. I mean, what does Bitcoin layer 2 mean? I think in a nutshell, it's making BTC a productive asset on chain. I mean, as we all know, like Bitcoin layer 1 with Bitcoin script is not really expressive and it's very hard to build DeFi applications as we know it. So the only solution here is building an additional layer that is on top of the layer 1 that has more programmability. So, right, one option is using EVM, right? Another option, there's other different programming languages as well, like Stacks, right? They use Clarity. So it's this idea of just making Bitcoin, which is more an idle asset, store value into this productive asset, using it as collateral, taking loans out against it all on chain in a permissionless manner. So I think, and there's different approaches too, right? I mean, you have Rollups, right, which is what we're building. You have sidechains, you have Lightning, which all have different trust assumptions, but at the end of the day, their goals are all the same. So, and I'll let the rest of the panelists speak on that.
To me, if I think about basically technology that is going to last in the Bitcoin space, it's technology that eventually needs to be as trust minimized or even trustless wherever possible as Bitcoin itself, right? Because if it's not that way, then Bitcoiners are just not going to use it. And it's a tough nut to crack. We are all working on the same problem through slightly different solutions, right? But to me, that's what gives me the impression of a program or a protocol that is going to last. And it's something where you have a believable roadmap to eventually get to that place. And you are going to do that by basically embracing the latest technology, developing the latest technology yourself when what exists is just not enough, with the intent of building something that is as trustless as Bitcoin.
Crypto has been extremely disappointing broadly. We were promising everything from the global substructure for a borderless financial world to decentralizing the internet. And what we actually have in reality is a extremely robust and exciting, but very limited ecosystem, which effectively breaks down into just 3 things. You've got Bitcoin, which is a key sovereign asset and a reserve asset. You have stablecoins, which are a means of transaction. And then you effectively have a giant world of global casino. And so I think it's very important to ask the question, why has crypto fallen so short of its ambitions? And I think it actually just comes down to 2 simple problems. The first is that the ecosystem that we've built out, the industry that we've built out, is one built on network effects, and yet we haven't built a substantial network. We've built an extremely fragmented ecosystem of fly-by-night systems, many competing layer 1s, a confusing mess, none of which have the heft to actually convert or become global infrastructure for finance. And the reason we have that problem is because we've the one network which has been able to operate as a Schelling point, which has the reliability, the trust, and the heft to act as the core network for everything else, which is Bitcoin, has been extremely limited from the perspective of what you can do with it. It really is only a transaction mechanism today. And so the big question for our industry is whether or not Bitcoin can become programmable. If Bitcoin becomes programmable, if that takes off, and if developers begin building systems to integrate the rest of crypto into Bitcoin and to build the systems that we've been imagining for the last 15 years on Bitcoin, then we will have a network which has the trust, reliability, and size to actually accomplish what we've set out to accomplish and to achieve the ambitions. If not, Bitcoin remains isolated, extremely limited, and most of the activity moves to centralized parties, and what is left of crypto remains a fragmented space of primarily gambling and speculation. And so really, this is the question for our industry, whether or not programmability will not just emerge from a technical perspective on Bitcoin, which is what is happening now, but also will it take off enough in order to reunify crypto into what it was always supposed to be, which is the Internet of Value.
Yep. And so jumping on that, like, right, I mean, it's exactly what BitcoinOS is trying to achieve, right? Making Bitcoin more programmable. What kind of products are developers building on Bitcoin today that could not have been possible before?
So what we're seeing right now, practically everything, a lot of what is being built now in the first instance, I think can be described as sort of catch up. So I think one way to think about Bitcoin as it relates to the rest of crypto is to think about China in the 90s as it relates to as it related to the rest of the integrated global economy. China was extremely isolated, but it had massive size and potential and huge human capital. Bitcoin is isolated, but it has massive size, potential, and human capital. And it has the additional advantage, which China also had, of being able for the coming few years to focus on effectively catch-up growth. And so I think what we will be seeing is the growth of DeFi, stable coins, privacy systems for confidential transactions, both for institutional and retail users, and deeper integration and bridging with other ecosystems, effectively catching up to where other systems are. And so I think because it's catch-up growth, it can happen much more rapidly, powered by the size of Bitcoin. And so I think there's a huge opportunity in the coming years. And then once Bitcoin has done that, then it will be where China is today, which is starting to eke out the new frontier.
Mm-hmm. Yeah, and moving over to Adriano, where what Stacks brings to Bitcoin are smart contracts and applications that now can be built on this layer too. How do you guys think about programmability? In Bitcoin, and how do you think about the trade-off between respecting the conservative philosophy of very robust, secure infrastructure and allowing for more experimentation and more nimble evolution of the network?
So we all know, right? Bitcoin is conservative and it's one of its strengths, right? However, it's also one of the limiting factors it has. It's like it's preventing it from scaling, it's preventing it from evolving, and so it's preventing it from fulfilling needs that are out there in the market, right? People want programmable Bitcoin, they want to be able to borrow against it, They want to be able to, build a complex ecosystem of DeFi applications, and they simply can't. And on Stacks, instead, we don't have those limits, right? We can iterate quickly, and we can build a layer on top of Bitcoin that unlocks all those use cases. And we have done that, right? The chain is pretty old. I think mainnet launched in 2017. We went through many iterations, and we are now at iteration number 3. As we do this, we've been in the game for a long time. We basically put together all the lessons learned to ensure that we allow builders to do whatever they need and to tap that market. And it's going to be a wave, right? We see that wave forming up right now, but there are probably billions of capital that are still not there yet. However, in order to be successful, you also need to respect Bitcoin's ethos, right? And that's exactly what we're doing right now. We are on a roadmap to basically take what we have right now, which is a pretty solid DeFi ecosystem where you can bring your own assets and bring Bitcoin, and we're making it better, more decentralized, and with less trust requirements for people that bring their BTC in. And ideally, the holy grail is that we will arrive to a point where you can bring your BTC, keep custody of them so that you're not pegging them into a different infrastructure. You're not bridging them, but you are able to use them in DeFi. And this is a hard thing to do, but we have a few interesting ideas that are in a pretty advanced research stage. And when I think about why Stacks is able to do this with respect to other chains, specifically other layer 1s or other layer 2s, is that Stacks was born for this, right? Stacks was born to unlock Bitcoin's DeFi. And so Stacks is willing to make changes to its own consensus protocol to make it possible to be efficiently verified on Bitcoin so that you can remove those trust assumptions. And you can basically, I'm still a bit torn on whether I should use trustless or trust minimized. We'll see. Like, the idea is to get to fully trustless execution, but we don't have everything solved yet. So for now, let me use conservatively trust minimized.
Yeah, and I think there's also a point of, right, this what in an ideal world you could do, but there's also bringing application earlier on and then improving the technology. Yeah, totally. And so on Citrea's side, your Bitcoin rollups are now live on testnet, right?
Yeah, for a year, and mainnet is very soon. So.
And so how are developers using ZK proofs in practice? What type of applications have they been building, leveraging your infrastructure?
Yeah, so I mean, when most people think of like leveraging ZK tech, it's on the privacy side. So we have a couple teams that are incubating, or we're incubating them. They're building privacy specific payment applications, just simple send and receive that leverage shielded transactions. So these are recursive ZK proofs. But for the most part, I think where the ecosystem benefits from the ZK tech is more like, ZK itself is really good with its compression algorithm. So being able to compress and batch transactions, I mean, this is what rollups are best at. So as a result, our developers and applications can benefit from 2-second block times and really cheap fees. So I think that's how our ecosystem is leveraging just the ZK tech stack as a whole. But I think in terms of like focuses, right, with why developers are coming and why they've been coming on testnet, is I think the idea of Bitcoin applications that are just built on Bitcoin is still fairly new. I mean, we've been seeing them since, I guess, Stacks, right, in 2018, and they've been evolving. I think the one thing we haven't really seen is like legacy DeFi applications come into Bitcoin. There's some here and there for sure, but because Citrea is fully EVM compatible, this is very easy for us. So rather than incubating our own lending application or finding some team to build one. We're partnering with Morpho to come onto Citrea and launch lending markets. So I think there is a benefit of just being EVM for this one reason that I just mentioned. So, and we have other examples too of just legacy DeFi coming in to Citrea. I think my perspective is the world of DeFi, the wheel is not broken, so there's no need to fix it. No need to overcomplicate things. I think Bitcoin DeFi is really simple. So pick and choose the best that exists today within the regular traditional EVM world and bring it in.
Yeah, and beyond interoperability and having the ability to, as you said, right, like just use like EVM code and just port it over and just have like established projects that know how to run those things, just move over and reuse a lot of the smart contract codes that they've been used to. Let's talk a bit about token standards, right? I mean, one big shift that allowed for DeFi Summer to happen was really the strong adoption of not just being able to move Ethereum on the Ethereum blockchain, but also have this myriad of tokens that can be composable and have these standards in common. And I'd like to move over to Yago, and we've seen a lot of new tokens and asset ideas show up on Bitcoin recently. We've also seen NFTs and a lot of other things, but what do you think makes sense long term, and what do you think is more short-lived and maybe necessary? But you said like 90% of things can be a casino. So what do you put in the short term, and what do you put in the long term bucket?
Until very recently, there was no such thing as programmable tokens on Bitcoin. Bitcoin itself is not an expressive, like you can't really program it to do very much. And that has been the core problem. But also other tokens that have been issued on the Bitcoin network have suffered from the same limitations. And so until very, very recently, there were no programmable tokens on Bitcoin. The first programmable token to launch on Bitcoin was launched just under 2 months ago, utilizing the system that we've built for it, called Charm. So it's a new token protocol. It works on Bitcoin, it works on other UTXO chains, and also can be migrated to other chains as well. And we saw a huge uptake because it's a token which allows people for the first time to do things like build communities and vote. And we've since seen other tokens launching as well, so that now BOSS on some days represents as much as 25% of the transactional activity on the Bitcoin network. And we expect to see that grow. So I think your question that you asked is, given that we now have the ability to deliver programmable tokens directly on the world's most trusted ledger, what can we expect people to do with them? Well, I think people will do with them all of the things that they've done elsewhere, right? So everything from meme coins to DAOs, to ICOs. But in my view, the primary value that we're going to see that can accrue specifically to Bitcoin is going to be in stable coins. There's massive value on Bitcoin. So the Bitcoin network, just in BTC alone, is some $2 trillion in value. And people are interested in borrowing against that, utilizing it as collateral, and doing so in a way where they can manage everything using the wallets and the assets that they currently have without having to trust third-party bridges or third parties in general. I think we will see stable coins. I think we will also see Bitcoin-backed stable coins, so the ability to utilize the collateral of BTC itself to generate stable coins. And then for the same reason, there are people, a large number of people now who have become quite wealthy with Bitcoin. We've seen the last year significant sort of reallocation. A lot of the people that I know who have been holding Bitcoin for 10 or 15 years have started to, they have families now, they have wives, who nag them. And so there's strong motivation now to diversify to a degree. And so they're interested in assets which will allow them to diversify, but they don't trust. I mean, the reason they got into Bitcoin is because they wanted to be able to have disintermediated finance. And so there's massive demand for the ability to have wealth managers being able to operate under programmable rules on Bitcoin, the ability to invest in things like S&P 500 or specific stocks like NVIDIA, while utilizing your Bitcoin wealth, either borrowing against it in order to make those investments or selling your Bitcoin directly into those assets. And so I think we will see that be the initial wedge which drives those assets to be issued on the Bitcoin network.
Totally. And of course, this panel is not really representative of it, but hopefully also some of those OG Bitcoiners have husbands and
some, but you'd be surprised how few.
I know, but yeah, but I know it's a common issue that Bitcoin cannot be mounted on the ring. So Gabe, moving over to you, tell us more about your approach, about the Rollups approach, and how your teams are thinking about using tokens or assets on Bitcoin, what is needed, and what things become possible where you don't have the base layer limitation.
Yeah, so as I mentioned before, we're EVM compatible, so the standard is fairly similar, identical even to ERC20 token standard. So how we think about, or how our projects think about, right, like their tokens, I would say it's the same as any other ecosystem. At the end of the day, like when you have applications and these applications have tokens, what are the tokens used for? It's incentive bootstrapping, right? That's the first thing. Governance, of course, and revenue share. So I think when it comes to the idea of what do the ecosystem tokens do, the playbook doesn't really change just because it's on Bitcoin. I mean, DeFi bootstraps itself almost the same way, no matter what chain you're on, right? I think the one thing that we do really focus on and care about is with stablecoins, interoperability in the sense, or composability, I should say. And the idea of this is where we would like to make it very easy for users on Ethereum, Solana, any other ETH2 chain to bridge over USDC, USDT, directly into Citrea. And we're able to do this through partners like Layer 0 and a few other atomic swap providers that we'll announce soon. So I think that's the benefit of the EVM side, but also that's kind of how we think about it as well. Like for composability, stablecoins, it's like you need that because you need to be able to extract from the ample liquidity on other chains. So yeah, I hope I answered your question fully. Let me know if you want me to touch on any other points.
Yeah, I think that's pretty clear. And over to Stacks as well. Like you guys have been doing this for years. So what have you seen show the most success, staying power, like being the best for the ecosystem?
We have definitely seen big shifts in where BTC allocation goes on bridges layer 2s and DeFi apps, right? And especially if you look at the last 12 months, we have seen people move basically seeking yield and going pretty much anywhere that yield was given. However, that's a signal that there's a demand, there's an appetite for it, but also that people are just going to go wherever they can find the best yield. And that is not a sticky business model, if you wish, right? And so I think abstracting away from that, because at the end of the day, the yield is only as good as you can organically sustain it, right? I think at the end of the day, we're going to see two types of users, which will lead to two types of assets. On one side, there's going to be those that don't care or are okay with the trade-off of being on a centralized custodian, because they can, they have a good UX, they can establish a contractual relationship with the custodian, and if anything goes wrong, they can literally sue the custodian, right? On the other hand, and here we were talking about OG Bitcoiners, I suspect that most of those people are going to be in that bucket. There are those that instead care about decentralization and about owning their coins and their keys. And so in that sense, assets that are here to stay are assets that are good enough for them, right? And good enough for them today might be that they are significantly or sufficiently decentralized so that no single party can basically run away with everybody's coin. Tomorrow is going to be an asset that is backed by more sophisticated technology, like the ones that we are all trying to build, so that you get the best that you can on the trust side, but also the best that you can on the use cases side. And I don't know, it's unclear today which one is going to win, right? What type of assets? Maybe there are going to be more than one. There are different technologies that can also complement each other. And we are seeing it, right? It's clear that there's an industry trend into basically making bridging or making infrastructure as trustless as possible. And we're all experimenting with the best approach to get there.
Yeah, well, and one part of reducing trust is bulking up on the cryptography side, right? And I mean, maybe Yago, you could say a few things on this. And BitcoinOS obviously also relies heavily on cryptography rather than trusting intermediaries. How did that help people feeling more confident? Not just the Bitcoin OGs, right? Like, how does that help, and how does that allow for more advanced applications to be built?
So it's a bit of a silly situation where you have Bitcoin or any of these crypto assets, and then you deposit them with a third party. The purpose, right, for which these assets, these technologies, these systems were developed was to avoid the reliance on these third parties for many, many good reasons. They can make a mistake, they can cheat you, they can come under regulatory pressure, they can reveal either advertently or inadvertently your private information. And so the goal here was to provide assets which overcome all of those problems and therefore can also operate globally across borders, and effectively provide assets which can work like the internet. So the reason it's so crucial that we are able to build additional financial products, additional opportunities for people to do more with their Bitcoin, with their stable coins, without having to go through central intermediaries or rely on those parties, is because unless you have that, you're effectively defaulting back to traditional finance, which has many benefits, but many, many, many limitations. So you can look at this from the perspective of a founder. As a founder who is working in the financial space, you really are going to be launching a business in the US or in a specific European country or in Singapore, but you're not launching a global product in the same way that a regular tech founder would. And that is because of both the infrastructure and the regulatory barriers that don't allow for global services and expansion. From the perspective of a user, your access to opportunities is limited, the privacy concerns are significant, and in an increasingly volatile global environment, you are increasingly exposed to systemic risks and sometimes even sovereign risks, right? Even the US today is considered a sovereign risk. And if that goes, the entire system goes. And so regardless of whether or not you have most of your wealth in sort of these sovereign and systemic risk hedge assets, or you're just keeping a portion there in order to hedge, that hedge fails completely if you then are simply reverting back to doing things in the traditional financial way. Now, not everyone understands this, but enough to. So the sophisticated capital, both institutional and sort of what people call OG, does certainly understand this, as well as much of what we would consider retail. And so offering sort of products on Bitcoin, which don't rely on cryptography, but instead rely on old world trust and regulations, has a very low glass ceiling of how much it can expand. And indeed, we haven't seen it grow particularly large at all.
Yeah, I mean, it's not even starting to touch on how different geographies have different requirements for the products, and where you have to, like, it's a lot of headaches. Totally with you there. And the other question is, when it comes to adding those extra layers on top of Bitcoin, how does it work in terms of risks that are potentially added to it in terms of settlement and security? And I think that's a good question for Adriano. How do you explain the security model of a layer 2, like Stacks, to you? Let's say a random user who may be worried about moving activity off of the base layer.
It's hard. Like, I'll be honest, I've spent a lot of time thinking about it, and packing it in a way that people understand, it's hard. And also finding users that care about it truly, it's hard, because we are still very early, right, in all this. And so I think this is the way I try to explain it to them. You're basically moving your assets from one layer, typically Bitcoin, to another asset, right? And so why are you doing that? You're doing it because you care about some unlocks that this new layer gives you. Typically programmability, or the possibility of taking a loan against your Bitcoin. And so in the best case scenario, you don't need to trust anyone else in addition to yourself, to Bitcoin, since you're starting from there, and to the execution environment of the infrastructure where you are arriving. So that's the perfect use case, right? It's literally, you're putting your coins in this machine, and you trust the machine to work, but you can inspect it. You can see how the machine processes inputs and outputs, and at that point, you can be pretty confident that about what's going to happen. However, today that's not typically what happens, right? When you're bridging it or when you're using it on another infrastructure, because you typically need to trust the infrastructure, which is okay, but you also need to trust the bridge. And there are different trust models, and here is where things get really complicated to explain to a user, right? Because, for instance, if you look at a BitVM model, then you need to tell them about the 1 of n trust assumptions, and things change on whether you are one of the n's or not. And if it's a retail user, you need to also tell them that they're not going to be one of those n's, most likely, and maybe their custodian will be. And so things become a lot more complex. I do believe, though, that we are on a path to massively simplify all this, because trust assumptions are decreasing, the required trust that you need to put into the system. And we will get to a point where basically the infrastructure itself is going to be verifiable because of how it's built, right? Because you can prove it, and you literally cannot make any claim that is wrong or false. And at that point, if you can also make it so that you can get to the infrastructure without having to trust any third party, then you're in probably a very good position.
So I think the way Adriano discusses these things is technical and accurate, but also symptomatic of a problem that we have. So the industry as a whole, and Bitcoin in particular, has sort of become used to using words which are not familiar and really don't mean very much to the people that we are trying to attract, right? These ideas of trustlessness, that sounds like a bad thing, right? I want trust, not trustlessness. Trust minimization sounds maybe even worse. Decentralization, why is that important? And so I think part of the reason that, Adriano mentioned he's struggling, and I think he can be forgiven because he's CTO, not head of sales, but he's struggling to find the people who are interested in this because there's a gap here in the language. What people are concerned about is the wealth tax in California. What people are concerned about is the fact that lawfare is being utilized in order to rob the US Fed of its independence. What people are concerned about is that across the board, the world is becoming more uncertain and less globalized. And so those are the concerns that we need to be addressing. And so the reason I made the point earlier that if what you are trying to do is build diversification away from that type of risk, in all of its different and unpredictable forms, then you find yourself back in Bitcoin, and you need to be able to put your Bitcoin to work. You want to be able to utilize your Bitcoin, transact with your Bitcoin, borrow against your Bitcoin, and perform confidential transactions with your Bitcoin. And I think that is the story that we need to be telling. And I think one of the reasons that MicroStrategy and Saylor have been so successful is because he's been telling the early part of that story, right? The part of the story where BTC, as just simply the asset, is able to provide sort of that kind of diversification and a hedge. And the second part of the story that we now need to tell is, yes, that's true, but it only does so, MicroStrategy only does so to a limited degree if you're holding MicroStrategy, because you're not actually holding the underlying asset, and you can't put that underlying asset to work if you're holding the ETF or MicroStrategy. And so I think the ETF and MicroStrategy have, kicked open the door for us. We now have the technologies to take that story further, but we need to change the language with which we're explaining what we're doing.
Yeah, I mean, and frankly, like a lot of the concepts of trying to get that sort of geopolitical diversification in the currency that people are using every day is not new, right? There was, even back in 2018, 2019, I think there was the governor of the Bank of England, I think back then, proposed to do like a synthetic hegemonic currency that would be a sort of like allowed to diversify from having everything concentrated in US dollars, right? But I think the trustlessness is important in the fact that it uses the advances in technology to make it more stable longer term and less reliant on shifts in governments or geopolitical powers, or because that's the thing, right? Like centralization, as we've seen, works really great when you have good people in power. Or when you have good systems in power, it's actually more efficient. But you're subjecting yourself to very intense risks if things get unstable. Love to get your take, Gabe, on rollups, right? And how to think about security of a Bitcoin rollup compared to you just using Bitcoin directly.
Yeah, so I mean, thinking about security of Rollup, well, I think the biggest differentiator of a Rollup is its data needs to get posted to the mother chain, right, the home chain. So for Ethereum Rollups, right, they post their transaction data onto Ethereum, and the reason for this is your home chain becomes the source of truth, right? All the nodes in your home chain have this data available. So if you think about it for Citrea as a Bitcoin rollup, sorry, I got distracted there. For a Bitcoin rollup, right, all of Citrea's data, transaction data, is directly posted onto Bitcoin. So what does that mean? Well, every Bitcoin full node will have access to the most recent state of the Citrea rollup. So effectively, right, Citrea as an extension of Bitcoin layer 1, inheriting security properties of the layer 1 itself. I think another part about the security of a rollup that people tend to forget is the ability to challenge fraud. And I think this is where specifically Citrea and our innovations with BitVM come to light, where unlike other systems where if some bridge entity steals funds, like in other side systems, you can't really challenge that. It's a dispute amongst the bridge entities. But with a rollup itself and what we've built at Citrea, if there's any fraud that happens in the chain, essentially any user could submit what we call a challenge transaction to call out the fraud on chain, and cryptographically and mathematically, if the fraud did happen, it gets reverted and the challenger is rewarded, and whoever committed the fraud is heavily penalized. And this is built into the system, and this all happens on Bitcoin, by the way. So when it comes to challenging, because all of the state data is on Bitcoin layer 1. So if you were to challenge if something fraudulent happened on a layer 2, everything's happening on the base layer, right? So I think in a nutshell, everything starts from Bitcoin layer 1, right? When it comes to Citrea, because we're just an extension of it.
Mm-hmm. And I'd like to shift gears a little bit, from the more like security aspects and trustlessness, and to more, how do we get to mainstream adoption, and how do we get to like as we're very interested in at the TIE, looking more at the institutional interest, and what role they will play in that ecosystem. Until now, institutions have mostly focused on Bitcoin as a store of value, right? That's been the the strategies of the world, the ETF, that's been the main narrative that has driven institutional adoption. At the same time, DeFi is very familiar for financial institutions because these are products that they know in traditional finance. It's just like, what they're used to. So how does that change when Bitcoin starts supporting more advanced applications?
Can I answer first on this? So you said, so I'm just going to kind of go to your first point, mainstream adoption with institutions. I think the easiest first bucket to go after is Bitcoin-backed lending. I mean, let's be honest, that's probably the most popular use case for Bitcoin at the moment. Unfortunately, a lot of this is on Ethereum, right? There's about, I think last time I checked, it's like $6 or $7 billion of WBTC used as collateral for cash loans on Aave, on Ethereum. So I think getting institutions more accustomed to Bitcoin in the way we think about it, more in a more programmable way, is opening up the doors for Bitcoin-backed lending so that institutions can use it, right? I mean, the only thing you can do right now with an institution is they will lock up native BTC in Anchorage and some escrow account, and then they'll give you some loan OTC, right, for a really high rate. But I think the ability for an institution to, this is a very important part, in a trustless way, bridge their BTC in and out from layer 1 to some programmable ecosystem and interact with a lending platform that's heavily audited, right? That's very important, and has ample stablecoin liquidity to borrow. I think that's how you get them interested, right? I mean, for just last year, towards the end of the year, I think in Q4, you had like JP Morgan open up access to BTC and ETH as collateral options for loans. But more and more, you're seeing TradFi institutions already open up lending for like Bitcoin-backed lending for native BTC. It's just all off-chain through paperwork. So mainstream is bringing that on-chain, I think, and making it much more efficient and easier for them to do that.
Mm-hmm. Yeah, and Yago, what's your take on this? Moving from Bitcoin as a store of value to what's next?
So first, let me define what I think of as mainstream adoption. I think a lot of people, when they talk about Bitcoin and crypto more generally, mainstream adoption, they are talking about individual people adopting the system. I actually think that is less important. It is an important metric, but the more important metric is how many assets are flowing into the system, because that's a logarithmic effect. What I've been seeing is there is a increasingly survivalist trend in wealth management. Not everyone, but it is, yeah, I mean, but I think this was the first year when it really became mainstream, when people started talking about the debasement trade as you know, one of the two primary themes, that and AI, right? The only thing that's outperformed AI this year was gold. And the reason is that wealth managers, high net worth individuals, and everyone else, sort of the long tail of money as well, have become more and more concerned about the risks that they are finding it hard to imagine, and wouldn't have even been considered previously. So I think that there's a growing bucket of assets that are looking to be removed from the rails of the traditional financial world, and those are the first tens of billions or hundreds of billions that are going to flow into this space. The first trillions of that have already flowed into Bitcoin. I think we're going to see significant additional appreciation of BTC because of additional flows. And then, like Gabe mentioned, people are going to be looking to generate a yield on that because they want to be able to live off it, because they want to be able to pay, you know, the costs of a mortgage, because they want to be able to pay the costs of running their family office. And so ultimately, some degree, even if low grade yield on Bitcoin, which you can generate without taking on additional sort of centralization or TradFi risks, is going to become increasingly popular, and there's already a significant demand for.
Yep. And when you talk, and that maybe I think that question is mostly for Gabe, but in your conversations, and specifically on rollups, but others feel free to chime in on, like, more generally, what are the main concerns or that institutions usually raise first?
I mean, with rollups specifically, right? I think, or maybe this is for everyone. I don't want to speak for everyone, but main concerns are with the bridge. I mean, when you're talking to an institution with fiduciary duties, their main concern and first question is, will I lose my Bitcoin, right? I think that's a very fair question to ask. And where would you lose the Bitcoin? In, like, from a step-by-step order, it would be through the bridge first, right? So like, the concerns are mainly with the bridge from my conversations with both treasury companies that want to deploy on Citrea, institutions that are not really crypto native, and both other institutions that are crypto native, like someone like Galaxy. You know, it starts with the bridge, right? So I think with us, especially like BitVM is, and this might not have anything to do with the rollup side, but just to answer your question, right? With a newer stack for the bridge, there's always going to be questions for it. And in this one event trust assumption that we're one of the pioneers for is also new. And while it's not the hardest concept to grasp, the fact that it's new, right? These audits that we've had on the bridge are, you know, these are the first of its kind, right? So I think I wouldn't say it's like an alarming concern, but they're just questions, and it's an educational journey for these entities to tell them how their Bitcoin is safe. Like, why is one event so important? So it's mainly with the bridge. So yeah, that's my answer to your question.
I can chime in as well. I think different institutions are going to have different risk profiles, right? And so some of them are going to be perfectly fine with going through a bridge. We have seen that, right? We have a wrapped asset managed by a decentralized set of signers, and there are like 4,000 BTC. Others instead are going to have a hard time even putting things in a time block, right? Which, to adopt a language that maybe Yago will like, and I agree, like we need to improve language here. A time lock is literally just putting things in a safe, and the safe will automatically unlock after some time has passed, right? But you need to trust the safe to work. You need to trust that mechanism to, not get stuck. However, there's a silver lining, and even those institutions, even those that are the most risk averse, have customers, the users that provided them funds in the first place, typically, right? And they're gonna do whatever it takes in order to grasp or to seize a good market opportunity. And so I think there's like a bilateral pressure in between the natural risk aversion of institutions, especially those that have fiduciary duty towards their users, and the willingness of users to go for applications that make sense. And so that's why we see that we are building better bridges or better infrastructure while we develop better applications, right? Because doing just one thing doesn't solve the problem and will probably never bootstrap the system. You gotta do both things at once.
Yep. And Yago, did you want to add something on this, or?
No, I think I've covered this. Yeah.
Okay, so because then I want to ask Adriano more like on the technical side. Then what are the questions or the friction points that you see with developers?
So speaking with developers, it's something that we try to do as much as we can, because there are, at the end of the day, there are users, right? There are lifeblood. And it's interesting because even things that you take for granted as you're building the infrastructure or the bridge, right, then result in subpar user experience, which developers fight hard to solve, because that's what drives adoption for their apps. And so, for instance, on Stacks, we can bridge this asset SBDC with a single confirmation, which is a pretty good UX, right? Because that means that basically, as a user, one block you are done, and your asset is on the other side, and you can use it directly. However, it's still 10 minutes roughly, right? Where the user, and specifically a user that maybe is not that tech savvy, will wonder why my asset is in flight and why I cannot use it. And so I think the biggest lesson learned by speaking with our devs, which are a lovely bunch, is to basically always keep optimizing for their user experience, right? And that means basically reducing friction and even developing new technology that allows you, for instance, to do optimistic minting or to reduce those one block confirmation time to 0, which comes with its own challenges, and it's a bunch of hairy things to solve. But that would make for a very cool user experience, right? Because it would allow you to bridge directly from the layer 1 to the layer 2, and then immediately into a smart contract or into a DeFi position. Same thing for when you're trading within the system. You need to make it so that the infrastructure is serving the needs of your developers, and have that very direct line of communication so that they can tell you, look, man, this is the thing that it's killing me now, and I would be 100% better if you would be able to fix it. And we've done that. We encourage anybody that has suggestions or issues to come up, talk to us directly, and we'll make it happen.
Mm-hmm. Yeah, I love that we're saying that 10 minutes is too long, and then I'm still, when I recently tried to move some assets to a higher rate HISA, and then they send a bunch of microtransactions, and that take days to arrive, and then you send the funds after the cutoff hour on Thursday, not even night, right? And then you have to wait until Monday morning for anything to arrive, right? So yeah. But let's start wrapping up and looking ahead as we're getting on time here. So over the next few years, like quick fire round, which part of the Bitcoin stack do you think will matter the most? Who wants to get started with this one?
So I don't think that there. I think I'm going to sort of try. I think part of the problem of that kind of thinking is there's inherent fallacy. So I started out sort of very first thing I discussed on this call with you guys is that the primary failure of crypto to this date has been its fragmentation. It is fundamentally a network product, right? Bitcoin is a network, crypto is a network, building a global financial network is a network. And yet, instead of a network, we have many, many disjointed systems which don't play nicely with each other. And so I think when you say which part of the layer is going to matter most, what you're sort of reflecting is the kind of thinking that has existed up until now and leads to further fragmentation, right? Which rollup is going to matter? Is it going to be layer 2s or side chains or whatever? I think what we're going to discover is that what really matters is what you can do with Bitcoin on Bitcoin. Because even while you might be able to do things more quickly with side chains or with rollups, the mere fact of their fragmentation is going to mean that they saturate their markets. And so I think the big thing to watch is, are we going to see more activity occurring on Bitcoin base layer itself, or are we going to see, alternatively, the Bitcoin ecosystem integrate more closely, its various side chains and rollups, so that it is a single unified and integrated ecosystem and a single network rather than a fragmented mess?
Yep.
I can take it. Yago, I wish your vision would come true, because that would absolutely be a pleasure to watch and a pleasure to contribute to. The industry seems, unfortunately, to be moving in the other direction, right? And in particular with ETFs and treasury companies, we see more and more activity happening off ledger, which is kind of setting the stage for a tragedy of the commons situation, right? Because if you don't have that activity, then you don't have enough miner rewards to eventually organically sustain the network. And so that type of indicator is something that I cannot predict, but I will absolutely be watching for in the next years. And I think that any successful infrastructure application layer, whatever we want to say here, will probably need to give back to Bitcoin, right? Or contribute to Bitcoin's utility in such a way that that tragedy of the commons just disappears and it becomes the infrastructure powering a bunch of additional use cases. There are also a few open questions, like the fact that Bitcoin doesn't have a good enough story for privacy is something that is coming up more and more, and I know that more and more people are thinking about it. So I wouldn't be surprised if we see some action in that sense in the next few months or years. This would all basically tie together with more activity on chain, which eventually might select some of the technologies and lead to more integration. I agree with Yago here, but maybe that integration will not come organically, but it will be more like a survivorship of those that are more fit.
Mm-hmm. And Gabe, any take?
You said 4 years. I guess I'll just keep it
2 years. Just
2 years. Okay, I'll just keep it straightforward. I think in the next few years, we do get a soft fork upgrade. I think we'll see either both OpCat, OpCTV. As a result, like trustless BTC in terms of just the bridging aspect would be fully achieved. I think it would probably be achieved sooner than a few years. But I think as a result of that, right, the day we have this trustless BTC, I think is the day we see the WBTC and other bridged wrapped versions of BTC supply just get drained into this trustless BTC. I think the only reason why people are using WBTC today mainly is just because, I mean, there's really not many other, there are other options, right? But in terms of like an option that gets them excited, haven't really seen anything yet, right? So I think, yeah, in the next few years, right, most of the programmable BTC will be trustless, and this BTC, a lot of it will be used for, my eyes, it'll be used for lending, and that's a prime collateral asset. So I think this is where we actually get to see institutions come in and use balance sheet BTC or client BTC and actually get them to use it in DeFi. That's my take.
Yeah, being able to get better, tax efficient ways to interact with your assets, borrow, and get yield. Right?
Yeah, spend cash, don't sell your Bitcoin. That's like the best world.
100%. Great. So let's quickly wrap up. And so before we go, for each of you, where can we find you? And what are the upcoming milestones to watch for your teams that people can look forward to?
So on Twitter, we can be found at BTC_OS. On the web, we can be found at BitcoinOS.build. I personally can be found at Edan Yago on Twitter. I think for us, the next big milestones we're going to see is on two fronts. One is the launch of the first set of interoperable rollups on Bitcoin over the next couple of months. And then we expect to start seeing more activity in terms of the programmable tokens, the Charms protocol. We expect to see increased issuance of that type of token going forward.
Yeah, and go ahead, Adriano.
Yeah, you can find more info about Stacks at stacks.co. You can find us on X at stacks.btc. Myself, I'm there as well, just first name, second name, easy. It's Adriano DiLuzio. And as for what we have up next, we have just introduced the support for the USDC, which has unlocked a lot of liquidity. So our biggest DeFi protocols are rolling out new versions that are going to include better performance, something similar to an AMM a la Uniswap V3, better lending and borrowing, and so this is all coming up in the next few weeks. So we are also going to announce another pretty nice bridge, and then midterm, let's say H1 2026, we are looking at a few improvements to our stacking, as well as leveraging more of a self-custodial protocol to do what we have been talking about here. So basically reduce trust, making it easier for people to unlock more use cases and diversify.
Cool. And last but not least, Gabe.
So if you want to read up on Citrea, you can go on our website, citrea.xyz. On X, it's the same thing, citrea.xyz. And for big milestones, so our mainnet is very, very soon. I think we'll probably announce it publicly maybe this week, but it's really soon. So that's like the biggest milestone to look out for. So yeah, I think it's very exciting. We have a big stablecoin announcement that's going to be a part of that. And yeah, all this work for the past 2-3 years will finally be out in the public to use. So looking forward to it. And if anyone has questions, always feel free to let me know.
Thank you. And thank you all for exceptional insights. And with that, I think it's time to wrap up. So thanks everybody for joining us today, and see you at the next one.
Thank you for having us.
Thank you.